So looking ahead to the week starting February the 24th, it's likely to be all about the coronavirus again. And so in this video, I'll be talking about the 7-year highs that we saw in gold last week and whether that can continue, and also the return of King Dollar, which is pushing multiple other currencies into multi-year lows. Now, talking more about that market backdrop, of course, we've seen those 7-year highs in gold. We've also seen other commodities like oil still hanging around multi-year lows, copper very much under pressure. Equity markets, we did see some record highs in the US. We even saw a record high in the DAX, but there was a pullback later in the week as those coronavirus fears intensified, as the virus seemed to spread outside of China, with a particularly high number of cases suddenly reported in South Korea, getting people worried about how quickly this disease can spread if it catches hold. Also, currency markets, the big move of the week was an extension of what we talked about last week, and that was that big breakdown in the euro. We dropped below 108 in euro dollar. We also saw multi-month highs in the pound against the euro, and we also see the Aussie holding down its 10-year lows. Well, it's 11-year lows, it's decade lows, and of course the new development of the week was actually that amid all these concerns about the coronavirus, the Japanese yen was no longer acting as a haven again, with some cases of the coronavirus actually making its way into Japan. The cruise ship off of Japan causing all sorts of, the quarantine cruise ship causing all sorts of issues. And so actually the Japanese yen declined with the dollar as a favorable haven asset. And we saw dollar yen, the currency pair, push up through 112 for the first time in 9 months. Now, before we talk about that gold breakout and the dollar in a bit more detail, let's look at the economic calendar. So GDP figures will be one to watch. We've got GDP out of the US specifically. That's meant to stay we've already had the first set. So this is the preliminary data. We're expecting it to hold at 2.1% in Q4. We've also got some other data from the US, durable goods. And in Japan, the economic data isn't always a big driver of the Japanese yen or even indeed the Nikkei. But actually, with the threat of a recession around the corner in Japan, actually the CPI and unemployment data might be a little bit more worth watching than normal. Also, at the start of the week there, China, of course, being front and center, we've got to watch those industrial production and retail sales figures. Now, talking about this King Dollar phenomenon, and this is when the dollar takes over and just seems to rise against every other currency. And so, for example, in the UK, there was actually a string of better than expected economic data points. Of course, Brexit's an overhang for the pound as well, but nonetheless, the pound just wasn't able to make material gains because the dollar is so strong. There was a similar situation in other regions. Europe, for example, actually saw a bit of an upswing in manufacturing data towards the end of the week, but nonetheless finished the week lower because the dollar is just looking so strong. Why is that? Well, it's really two factors at hand. One could dissipate. The other looks like it's going to be a bit more enduring. So the first one being the coronavirus and just that desire for a haven. US investors are pulling their money back home, taking their money out of overseas, which they perceive as riskier, bringing it back to the States, and indeed foreign investors putting their money into the United States just because the economic backdrop seems a lot more resilient to what is going on in China. Obviously, those nearby Asian economies are a lot more exposed to China because of their strong trading relationships. And it's why we've seen the Aussie hit so strong, most notably. The other thing is that, again, that US economic data is just looking very good. Undoubtedly, there's going to be some effect on confidence from the coronavirus. But nonetheless, China have said they're going to maintain all aspects of the phase 1 trade deal. And so with those trade uncertainties out of the way, the Fed themselves have said that actually the backdrop for the US looks good. So when all around are looking uncertain, the US, with this 2.1% GDP growth, which is not stellar by any means, still the US economy looks like it's outperforming, not necessarily on that measure, but many other measures. It looks relatively good. And so the dollar benefiting there as both a haven and relatively strong economy, where it seems probably one of the least places where you'd expect a rate cut around the corner compared to other countries and other central banks. Now, the other thing I wanted to talk about was that 7-year high in the gold price. We've been bullish on gold for a while here, a lot of things supporting the yellow metal. So Uncertainty, again, back to the coronavirus. We just don't know how this thing's going to work out. It's very hard to forecast for economists exactly how these travel restrictions, how the lack of movement in Chinese tourism, how that is actually bearing down on the global economy. Very hard to judge. And so amid all that uncertainty, of course, gold doing well. But I would argue the bigger factor, even before the coronavirus was really known as a big global issue, is the liquidity that's currently sloshing around in global markets. So interesting, the last FOMC minutes, so that's just the minutes from the last US interest rate meeting, it was largely ignored, but what was an important takeaway from our standpoint was that the Fed seemed fairly relaxed about keeping their treasury bill purchases going and their repo market operations going. All that is with the aim of adding money into the system. And while there's lots of money sloshing around, paper assets tend to get devalued. Hard assets like gold are harder to devalue, and so that high liquidity in the system is encouraging people into a non-interest bearing asset like gold. And so while that remains the case, while the Fed, and as we just said, they're one of the least likely to cut interest rates, while the Fed and other central banks are more inclined to add money into the system, that should be supportive of gold. And so that's why we think probably this $1,600 per ounce, it's a big round number. We may see some short-term pullbacks in and around this zone, but nonetheless, the broader picture for gold looks pretty encouraging. Okay, so that's it for this video. Thank you very much for watching. If there's anything you want me to cover in the next week's video, please post a comment on YouTube or social media, wherever you're watching this. Otherwise, please make sure to like and subscribe the video and follow us on YouTube and social media.